Hi everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 5th of May. Now in today's video there's a bit of an equities theme. The sell-off on Wall Street yesterday driven by the big tech stocks, and the question is this a start of a bigger correction or is it just a near-term move, just blowing the froth off the top of the bull run? So we're going to start to look at some of these equities with the S&P 500 and NASDAQ and showing whether Wall Street is in that corrective phase. Now, the move yesterday was driven probably by or possibly by some not so helpful comments from Janet Yellen, who started talking about the need to raise interest rates to prevent an overheating of the economy. The question, as I said, is that whether this is the sign of things to come. Now, we've got the ISM non-manufacturing data today, which again could paint a picture of how overheated the economy is becoming in the US. So that could have implications certainly for markets this afternoon. Now, in terms of the dollar move, we saw a bit of a dollar rally yesterday, and it's just unwinding a little bit and just holding some ground this morning, a bit cautious on these markets. So how the dust settles will be interesting. Now, at the end of the video, don't forget the INFINOX support and resistance table, good for trading levels, I believe. In regards to the charts, as I said earlier, we're looking at the equity markets today. S&P 500 and NASDAQ pullbacks on both of them, driven by the NASDAQ. Bigger correction on that NASDAQ. So the implications of that for the technicals will be interesting, I think. And also looking at the DAX as well. The implications for this big move on Wall Street yesterday impacting on Europe. How that has affected on the DAX chart. Okay, so let's have a look. So on the INFINOX MT5 platform now, you can see that the S&P 500 has basically been in this broad uptrend channel ever since late last year. And it's been continuing to bash against the top of the uptrend channel, but it's beginning to roll over. You can actually zoom in here and see this negative divergence on the RSI with the reaction high that we saw last week. A lower high on the RSI would suggest slowing momentum, and they're rolling over yesterday. Now, it actually hit back into support band around just above 4,100, 4,001 to 4,120 area. That support band has initially held. Now, the question is this the start of a rolling over? Just zoom back out. This is the 4-hour chart. Sharp move to the downside, but reclaimed that. And it has actually bounced back into a band of resistance. So how the market reacts in this resistance around 4170 to 4185, I think is going to be important because it's now trading underneath these moving averages. It's trading with a more corrective 4-hour RSI as well. So despite the fact that the S&P 500 has rebounded, if this now starts to roll over again, it would put pressure on that 4,100 area of support, which I believe is key on a near to medium term basis. If that breaks down, then going back on the daily chart, you could see that the S&P 500 then pulls back towards this uptrend of the 55-day moving average and potentially the bottom of the uptrend channel. So this is an important moment for the S&P 500. Moving on to the NASDAQ, you can see that NASDAQ's similar uptrend channel has been playing out, and it's just again been rolling over in the past week or so. Sharp move to the downside again yesterday, completed a small top pattern. Zooming in once more, you can see that top pattern there. That actually has had a downside projection, which has all but been achieved. 13,350 is the projected target of that corrective downside top pattern. But it's back into this support band again, 13.3 to 13.4 area, really important support on a near-term basis, because if that breaks, then just zooming out one more level, you can see here that the next big band of support comes in underneath the uptrend channel. So this is again an important moment for NASDAQ. Resistance now comes in for NASDAQ at the neckline of the top pattern, which is around that 13,700 area. And for the DAX, well, you can actually see if you draw in an uptrend channel, the DAX is now breaking the run higher that it's been in since late autumn last year. So that now means that the DAX has completed this top pattern that I've been talking about for a while. Actually, the downside move of that top pattern is around 14,650, I think it is. So it could have more downside potential in this move, and you've got a more of a weighting to the downside and a corrective move on that RSI now on the daily chart. That neckline of the top 15,085 now becomes a basis of resistance for the rebound that we're seeing today. So if this rebound now starts to falter around that neckline, we could easily see a much bigger corrective move back into the mid 14,000s. So this again is an important move for the DAX. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Friday, where I'll be looking ahead to the crucial non-farm payrolls report and the implication for the markets on that. So with that, I will leave you with the INFINOX support and resistance table, and I'll speak to you again on Friday. Thank you very much.